Our traders back for another episode of Technical Tuesdays amongst some very interesting market dynamics at the moment that are happening. So again, this is a pre-recorded show. I'll be in the live chat on TradingView for you if you have any questions. Let's get started. Okay, so looking first at the US dollar index, we can see the dollar, despite the soured risk sentiment, has been sort of treading water a little bit. There's a little bit of negative divergence here, a series of lower highs as price makes higher highs. So momentum, price is pushing higher on less momentum. And yeah, the bulls are struggling to push it high at the moment. There is a bit of positivity with the talks happening in Ukraine and Russia, although there was no result yesterday. So that's still one to be decided in terms of what happens there. In terms of targets wise, I'd look towards this trend line where the 50-day simple moving average is and the 21-day exponential moving average. On the downside below there, you've got the 95.5 support. And then to the upside, test of those former highs, just shy of 98, 97.6 would be the place to look for. Let's move to Euro US dollar. We're seeing price has now rallied off those lows. We could potentially be seeing a little double bottom pattern here. Price is rallying now up towards that former support, which is now turned to resistance about 112.5. We'll have to see if it can overcome that for the bulls. Beyond there, back to the middle of the channel around the two moving averages would be a good point to monitor, a good level to monitor. And above there, we've got the 113.5-ish area, which is the former range resistance. On the downside, a retest of those lows look like quite a good target to monitor. The RSI, again, slight bit of divergence here, lower low versus that point there, and price here made a lower low versus that point there. Moving on to cable. Cable's quite an interesting one. I've drawn, obviously we got the Fibonacci here drop below that level, and it rallied back up. It really did drop like a stone on the 24th of Feb. Price has now put its head just above that 61.8 Fibonacci level at 1.34, the round number. The RSI has bounced just from nearing oversold territory. It's having another bounce back up. Targets-wise, 50% fib and the 38 around these 50-day simple moving averages, as well as the downtrend line of that descending channel will be key. And then above there, we've obviously got the 200-day simple moving average. Price bounced off once before, rolled over from once before. On the downside, a retest of those lows and around the round number at about 133 would be a good level, important to monitor. Let's move on to EURGBP. I've added another Fibonacci here. We can see price now is currently bouncing up against the 50-day simple moving average, the 21-day exponential moving average, and the 23.6 Fibonacci level, 0.835. Obviously, round numbers like that do tend to act as levels for markets that ebb and flow away from there, which is important. And moving forward, on the downside, a retest of those lows at around 0.83 would be key. And then on the upside, we've obviously got another test of that 38.2% Fibonacci level if we do break this 23.6 level now. Beyond there, we could see another retest if EURGBP rallies up to the 61.8 level Fibonacci, as well as the downtrend line of the descending channel and the 200-day simple moving average. We're still quite away from this key level of resistance here on the RSI at 63.68, which you can see drawn in there. So yeah, interesting times for EURGBP, given everything that's going on. Let's move on to US dollar JPY. We're seeing potentially, I did some analysis on this on the weekly close on Friday, shaded circles here, potentially a double top as price just broke above that resistance at 115.4, and now it's come back down. The RSI is a bit in no man's land, so can't really discern any information from there. I've drawn in a little bit of support here at around 114.5, this middle of this sort of range. Price is below its 50-day simple moving average at the moment. Looks like the 21-day wants to cross down below it. This is just, I don't really see this pair having too much excitement at the moment while there's risk off and the politics in Ukraine and Russia. It should be more range bound. But once that maybe clears up, I definitely see the US dollar JPY as a US rates proxy play, and this pair should push higher. And the first place I'd look for it to take out would be these highs here around 116.3. Then moving on to the one that I love to check is the for risk sentiment is AUDJPY. We know the Aussie's having a good run of late with commodities. It's broken out of this triangle pattern here to the upside. Can it hold, or is it just going to be a fake breakout? There's a bit of resistance here at 0.84, the round, at 84, the round number. The RSI is bumping up against resistance here at 62. I would like to see that broken and a conclusive break of this 84 level, as well as that high there at around 84.3, to see sentiment continue to push higher. Then going to commodity land, we've got gold at the moment, which is hanging on. It's doing well. It's above the 62.8 level of resistance here for on the RSI. It's not in overbought territory yet, but it has run up very strong, and that makes it prone to drawdowns. We've got this indicator, the percentage above below the moving average. It's quite high, as we saw compared to November last year. It's not as high as the peak in the 28th of May last year, around June. 6.61. We're now currently at about 4, so we're still about 2 points off there, 2 percentage points off there. So yeah, interesting one. 1925, there seems to be a bit of resistance here around that area, 1920. On the downside, there's definitely resistance here around 19, the round number 188. So for further sell-offs, look at that, and then potentially also here by the 21-day exponential moving average, which also comes in line with that high there. And then lastly on crude, again, above 100, we're in overbought territory, not as overbought as we were there. Be interesting to see if the RSI actually goes higher than that. If not, there's a big divergence. As you can see there, price has made a much higher high, but the RSI has made a lower high than that point there. Interesting one to keep on the radar, but it can become more overbought. The momentum in crude's very strong at the moment with everything going on. And this 21-day exponential moving average has been acting as a real nice sort of dynamic level of support on the upside. Price has come back to touch it or just been above it, and sort of like a trailing stop. And then 95 would be the drawdown level of support if we do see crude come off a bit. Let's take a quick look at interest rate pricing. We've got the December contract. We're back below 6 rate hikes by the end of the year. We're just under 1 for March. April, we've got about 1.5, just under. July is still over 3, just below 3.5, and September over here, the purple line, is just above 4 hikes. Most rates have come off given everything that's going on. Money markets are saying, well, with all the uncertainty, it's probably best to play it safe. But stagflationary fears are rising, and it's definitely one to have on the radar. Thanks for listening, and I'll see you next week.